Paul, are the Japanese about to intervene again?
Well, I wouldn't count on it, Guy, but we are close to those levels where the MOF and the authorities in Japan might be starting to get worried again. We're not too far off the levels that we got to, around 160 yen a few weeks ago, that sparked that very first round of intervention for this year that we saw, trying to support the currency, prevent it from weakening further, or at least slow the pace of depreciation. And that's really the key for them. What they say all the time is it's not about the absolute level, but it's about that pace of weakness. And if you look back over where we've been for the last few weeks, we've been pretty steady, just a gradual edging lower. So from that perspective, probably not. But on the other hand, you want to keep an eye out because they do tend to intervene in kind of clumps. And so having done it a couple of times already, the market will be on edge for the likelihood that they'll continue to push back if we do see further pressure. And we are seeing it, across the board from the stronger dollar at the moment in Asian currencies.
We need to keep an eye on the Japanese. We need to keep an eye on the Swiss. Let's talk a little bit about what is happening a little later on today. Expiries in the States, triple witching. Volatility to follow?
Well, it could be. We haven't seen very much of that recently, have we? And implied volatility levels are extremely low as well. So that does point to the idea that there could be some pent-up risks out there. It's a particularly large-looking volatility event, but also a very largely skewed one in favor of calls. That's where all the expiries are. Very few puts out there. So if people are looking to cash in rather than roll on, then that could cause more opportunities for sellers to step into the market, to add a little bit of pressure into the US equities. We have seen a little bit of a bump. We got to extremely overbought levels, particularly on the NASDAQ earlier in the week, and that did cause somewhat of a pause, at least for breath, as we get ready for this event that we have to bite off this week. And then again, next week, we have some index changes, people coming in and out. So there will be some scope for extra volatility into the end of the week ahead.